It's been a week since my video on Silicon Valley Bank and the collapse of the 16th largest bank in the United States. So let's recap what has happened this past week and what we need to look out for over the next couple of weeks. I'll share with you two graphs that will help our discussion. Before we get started with the graphs, we need to know that the pressure on the banking industry continues to mount. Silicon Valley and Signature Bank were under a lot of pressure last week. They ended up collapsing. This week, First Republic and Credit Suisse, both of these banks felt a lot of pressure and they had to be rescued. They were rescued with new capital. First Republic received $30 billion from a group of 11 banks, and Credit Suisse received $50 billion from the Swiss Central Bank. The pressure on the banking industry can be shown in this graph. I first raised concerns about this in a blog post on December 30th, 2022, and it has gotten so much worse since then. In December, I actually wrote this. As the Fed increases interest rates, liquidity decreases. Some financial institutions will face challenges as money becomes scarce. The Fed is the lender of last resort, and therefore will step in when needed. Recent data indicates that there is an increase in loans issued by the Fed to financial institutions. Nothing to worry about at this time, but something to keep an eye on. And sure enough, it's gotten much worse. So let's look at how that same graph looks like today. This is how it looks. There's an even higher level of lending, much higher than the 2008 to 2010 Great Recession. The other graph that I want to show you is one that my student Becca Wilson worked on. Becca has become really interested in financial institutions. And here she's interested in the number of bank failures in the US. Last week, she created this graph. Becca shows that the bank failures from 2000 to 2023 on this graph, there's been at least one bank failure in a state per year during that time frame. And as many as 29 bank failures in a single state, and as you might expect, that was in 2010. The talk recently has been focused on the bank mismanagement of operations and risk. There is some of that happening, but it's also a function of increasing interest rates and the speed in which interest rates are increasing. I would be really surprised if the pressure on the banking industry eases up anytime soon. Uncertainty and anxiety around personal finances won't help here. It is what's causing this pressure. Make sure to stay informed on the economics around you and how it impacts your personal life. If you enjoyed this video, make sure to subscribe, leave a comment, actually like it, because that actually helps this channel reach more people. And as always, I love hearing from you, so a comment sharing your thoughts will make my day. If you're new here, my name is Dr. A. I'm an associate professor of economics, and I love teaching economics. See you all next week.